Good day. This is the Elliott Wave Weekly Update for the S&P 500, being recorded on Saturday, December the 14th, 2024. I am going to start with the SPX chart, and I'm on the weekly, 3-year weekly, and I am basically just going to give that quick update that I normally do, but also at the same time, it'll be explaining the building blocks concept of what Elliott Wave actually is. So the largest degree that I'm counting that can be seen on this chart is a primary fifth wave. And the primary fifth wave began in October of 2022. So from that time, within primary wave 5, there will be 5 waves of intermediate degree, of which 1 and 2 are complete, and we sit within intermediate wave 3. So within intermediate wave 3, there'll be 5 waves of minor degree, of which we have 1, 2, 3, and 4 complete. So we sit within minor wave 5 of intermediate wave 3. Now, within minor wave 5, there are going to be 5 waves of minute degree, of which we have 1, 2, 3, and 4. So we're sitting within minute wave 5 of minor wave 5 of intermediate wave 3. Now I'm going to start bringing it down. And let's go to the 4-hour chart where we can take a look inside this minor fifth wave. So you can see we have minute 1, 2, 3, and 4 complete. We're inside of minute wave 5. And within that, there again are going to be 5 waves of minuet degree. And within that, I'm going to bring it down to the hourly chart so we can look inside. I believe we're still in the process of putting in a minuet wave 4. So that would be minuet wave 4 of minute wave 5. So we're, in my opinion, very close to reaching the high for intermediate wave 3. And that's been an important juncture for us because from there, we would be anticipating a larger intermediate degree fourth wave. Now, again, just to review the stats on that, what again we'd be looking for, again, I'm going to go to that 4-hour chart, a 3-year weekly chart. We, as Elliott taught us, a fourth wave will find its terminus, its endpoint, within the fourth wave of one lesser degree, or the fourth wave of one lesser degree. So if we're counting and finishing up an intermediate third wave, that fourth wave would be expected to come back down towards the low of the fourth wave of one lesser degree, which is the minor. So this correction that we're looking for, it's going to seem, of course, very big because that low here in the SPX is 51.19 or 51.20, we'll call it. Now, based on that, right now we're trading at 6,051, and we've actually been above 6,100, just above, but we've been above 6,100. So that's 1,000 S&P points that the market would need to correct inside the structure of this intermediate fourth wave. It's not the end of the world. It may feel, I would imagine, in some of the sections of the decline, like it's crashing, like the market's falling apart, that the world's coming undone. But in essence, what we're dealing with is just how the markets have tended or realized that they've gotten themselves into an extremely overvalued position. And that seemingly is across the board when we start reviewing some of the prices of how high the stocks have reached. It goes beyond just the Mag 7. It goes beyond the top stocks within the S&P 500. There are many where you're just like, wow, look at where that's gotten now. And that could be for various reasons, but still, overvaluation is overvaluation, and the buyers remain firmly in control. Now, the other thing that we've been talking about and just trying to put together is the probable path of how this is all going to finish up. So I'm now down to we're inside this final minute fifth wave up. And the market has been pushing with great volatility, I might add. So volatility has kind of sunk down, which you would expect when a market is rallying. But the intraday volatility, and what I'm referring to is what's happening in these individual components within the S&P. For example, in Tesla, for example, in Meta, and in Microsoft, in Nvidia, these larger stocks inside this index, the SPX. Not only are they in the NASDAQ, but they're also big in the SPX as well. Now, considering that the flow of capital has been massive, and you can see that via the number of shares that are trading on a daily basis. And let's just take a look at what we had from Friday in a stock such as NVIDIA. 231,514,000. That's what traded in stock alone in NVIDIA. That's just NVIDIA. Add to that Tesla traded 89 million shares of stock. We have Google suddenly jumping into play and coming in for many parts of the week. It was trading 35 to 40 million shares. And normally Google has been trading between 8 and 10 million shares a day. So we've seen a large capital flow being pushed into Google. We've also seen it in Amazon, in AMD. And Apple is staying within its, what I would say, regular band of volume, but towards the higher end of that. So Apple, 33 million shares. So we're seeing the capital flows continuing both sides, right? Both sides of this equation, sell side, buy side. So with that, we're also taking into consideration the tremendous, I'm just going to go to Broadcom, which saw 121 million shares trade on Friday. Of course, they came out with earnings, and so that was part of that whole play. And it was also, Friday was an expiration. But we're seeing very large positions. These are what expired. So we're going to see a lot of the gamma, a lot of the fluff maybe come out of Broadcom. But at the same time, if all of these long calls, they're getting long the stock at 225, let's say, which you can see it went out bid 225. So that kind of lets us know that it's very likely we're going to be seeing a continued inflow, or possibly we'll see what may happen. Now, coming on to the 20th. So this is my other point, that I'm looking at these stocks for what does it look like for this coming Friday? Because if you remember, part of what I've talked about is that the volatility, I believe we're trying to determine how long will this volatility keep the Mag 7 and or certain of our larger corporations within the S&P very, very active. And part of the determination was like, how big will the yesterday's expiration be, and how big will next Friday's expiration be? Well, next Friday's expiration is so dramatically, and I mean dramatically, call heavy, very much call heavy. In fact, I believe it's the largest since numbers were given to us. So it's the largest ever in a call heavy expiration. The last major, or last monthly, the last triple witching of 2024, and it intends to be very dynamic. Now, what will be interesting is if a lot of these calls are going to come off due to the expiration, so they will be exercised, is delivering a tremendous amount of long stock to people, to traders, to firms, to whatever. And that could be how we're going to start 2025. So again, what also I'm looking at is like, where can we expect the possibility of when this minute wave 5, and internally we're looking for that minuet wave four to complete, minuet wave five to take over. How far will that carry us? Well, we might see that wave four kind of come in on, I'm going to think either tomorrow or Monday morning, and then we start to rally again. Now, there is always the possibility that's not going to be the case, and they're just going to start getting out of some of this long positions that they've accumulated. I don't know. But right now, it's appearing to me that the individual volatility, that's the volatility within the underlying, not necessarily the VIX itself. The VIX itself tends to still hang around the 14 handle, so it's within 14. And so I would imagine that if we continue to rally, they will continue to knock that stock down. But guess what? That continues to suggest that what we have going on is the risk on trade, which has been in effect for quite some time now. That's why we have this call heavy load coming due to expire next Friday. So I'm going to say that the volatility within the market will remain. And so we're going to continue to see these large swings, higher, lower, higher, lower, and in the individual stocks as they get shifted and moved around. So again, we're getting closer to, of course, the 31st of December, which of course is the last trading day. So could be like the last minute Christmas shopping, so to speak. So the Santa rally, as many are considering it, is well in play right now. But we have been talking on a seasonal basis how the expectations were for a dynamic rally to take hold and to push stocks up to mid-December. Now, granted, the 20th is not necessarily mid, but it's not that far off of the midpoint. And so I'm going on the basis that likely we're going to see it. And we may start to see it sell off also on the 20th. So, and then we'll kind of see how we come in on the following Monday, the 23rd, because then we basically have a holiday shortened week. It is Christmas, which is outside of Thanksgiving, the next largest family holiday, and where many traders and people will likely be taking that week off because of traveling and because that Christmas is on a Wednesday. So we probably won't see much happen on Thursday and Friday. We may, again, because it is a holiday, but it also is year end. Okay, so back to how I'm counting it. We're not really changing around the count. I know a lot of people are trying to postulate or just position themselves into what they think is actually going on. I still am under the, I don't want to say influence, but I still believe that there is still upside to come before we can close 2024, before I think that I'm going to be finishing minute wave five. I have some suggestions on possibilities of where and what might be happening. Now, here in the SPX, inside this wave, I'm pretty satisfied with what we have thus far. And that within minute wave five, I have minuet 1, 2, and 3 complete, an A, a B, and then we kind of are coming down. And I might just flip it here and just look at a line chart, and it's still not quite. I would like to see it down below. And that suggests, like, so what we've done is we've come down, we've reached a 0.236 level, but I'd like to see the 382 level come into play a little bit. Now, what we've got sitting there, at least on the hourly chart, is we have the fib number, and that's at 6,006. And we also have the hourly 200 period moving average at 6,005. So basically sitting right together. And I think that should provide some strong enough support where we get that low put in, even if and to be honest with you, I just really want to see it come down below 6,029. 6,030. That's where I'd like to see it come below, put in a new low. And giving that this is our next support area, and it should be strong enough, hopefully, should be strong enough to contain it. As I've been saying all along, that I believed that the minuet fourth wave should remain above 6,000 here in the SPX. 6,000 at this moment remains of strong support level. Below 6,000, and we might start to see some weakening of the underpinning support for the SPX, and that would be towards year end. So again, I'm not really looking for this next week. I think the market's going to continue to be well supported and in lining itself up for triple witching, which will be next Friday, the 20th of December. So I'm going to be looking for this to kind of come down and then start to come back up again. Now, I have for this one, I should come off because it's done. So let me get rid of that guy and remove it because that was all part of the third. Sorry that I left it there. I didn't notice it before. And once we come back down, I will be looking at wave 4 against wave 1. So minuet wave 4 against minuet wave 1. You can see it's pretty small, so but we should start to be able to fill these gaps. And let me just kind of give somewhat of a thought to what all of this could look like. And let's just say it does come down to, well, I'm going to use that low and just to kind of look at it. And so what we've got to do is take out the fluff because we need to get above. And you can see that the market will have to really go above 0.618, 0.268. And let me just go here and we'll have 1.882. We can put that in. And I am going to be in this color. So I'm looking for minuet wave 5. Let's just see what all of this looks like. For starters, come on, why is that not one too good? Thank you. So we have 6119, and again, I still have, and I need to do one more. I'm not sure what happened to all of these and where they disappeared to, but they did. So we got one more I'm going to put up, and that's going to be this fourth wave right there. Let me just get out of the way and go here, here, here. I believe it's going to come in. Maybe it won't. Maybe it. Let me just take a look at what these look like. I apologize. I thought this was all done. We have the fourth wave, and so we do have that 0.618. So now let me bring it back down to that hourly chart. And we're looking still. Yeah, that's what I thought. It's down a little bit lower, but not all that much. And at 6,182 is where minute wave 5 would be 618 of minute wave 1. And that would be fitting. Wave 1 was pretty large. Wave 5 should be smaller. And that it fits because of the structure of the move. Within it, we can count 5, 618, not the most popular. The most popular is 100%. That puts us up at 63.85. So again, I can't say for right now that the market won't catch fire again. Fire to the upside, by the way. You know, that it just, for whatever the reason is, you know, we cannot discount the possibility of getting a strong finishing minute wave or minuet wave 5 up. Right now, we're gathering around 61.30 and then 61.75 to 61.80. And then a break again, you kind of see it takes us really up pretty high. And I'm not really looking for that right now. I am thinking that we could get closer to 6,200. But I think that, you know, things will start to fall into place. Now, I'm also beginning to feel, like I just said, that we may reach that pinnacle by Friday. and then be lined up to start an intermediate fourth wave down. Or we stretch this all out. Not only just we get through the 20th, but all these long positions show up come Monday. And so we got a lot to deal with, and they might just continue to push higher. Again, that would then push us to the end of the year. So two things that I'm trying to just get a gauge on as to when we might see a switch in volatility, where they start, we should see a lot after December 20th expiration. A lot of gamma is released from the market due to the expiration. And being it's going to be so call heavy, I'm thinking that we might get a quick pop in volatility. And that would coincide with some selling. So again, these are just me postulating on a possibility. Nothing is really cast into stone. The market itself is going to let us know, but good to have an idea. All right, so our levels, we have to the downside, we have 6,030, and then we have 6,006 down to 6,005, and I think that's going to be the area that I believe should hold. Below that, we have 5,977. If it gives a solid push, but I think if it does, it'll be a touch and go type of situation. That would be my feeling. I don't think the market is ready to rocket to the downside unless something over the weekend bubbles up and explodes. We know that there are still plenty of geopolitical situations that could create that. All right, so let's go over and take a look at the ES. Basically the same, but still doing really well. Now here we are. I have put in a low for that minuet fourth wave. Unlike the SPX, I've not put it in yet. So in the ES, I may be shifting that because you can see what we've done. And so, in fact, it did come over and it equaled. So this is an A, this is a B, and well, nah, it's not going to work. That's an ABC. It could be a 5, and this could be a 2. But I'm likely going to move this. I'm going to leave it right here because we're still in the same zones to what I think we could get coming up. The fact that we slipped all the way back down kind of tells me that we might finish this over here. And if that's the case, then I'm going to be looking at, I need to put these back up for right now. Let me just fix this up so that we're clean. 236 is already gone. 382 would be in play, and 50% would be in play. And 618, I have to leave it just in case. But we're not looking for that necessarily. So, oh, come on, thank you. So what we have here, again, is not that much lower. We have 382 at 6,033. And we could drop down to that, finish this 4, and this is going to move over. And what it all becomes in between is this is an A, this is a B, and now we're working a C wave down. As ugly as it appears, it just may not be complete yet. And so I'd be moving this over, to be honest with you. In fact, I am going to take that out for right now, and kind of slip it over as a possibility. So let me redo this. It's not going to make all that much of a difference because if I move this down to here, it's not going to make that much of a difference. And move this over to here. I'm just going to put it down here because we also have that 6,009, and that's also below the hourly 200 on the futures market got crushed on Friday. with success that we should continue to drop. But I think we're going to find our support. And at least we might come all the way down to here. So I'm going to leave this open for right now. And I'm going to take this guy off. I'm sorry, I thought I did all this before I came on to record. I leave things such a mess sometimes, and I apologize for that. So just to clean it up, we got 1, 2, 3, 4 still in progress. We still have our support at 6,030, 32. And then we have 6,009, and then we have 59.85. So both coinciding with what we have over in the cash market. Now, don't forget that also next week, we should see the roll between the December and the March contract come into full force. And by midweek, if not, I think or swim sometimes does it immediately, and we may be starting with the March contract on Monday. I normally use that when we're looking at the futures market. We're looking at the difference between the two futures. And right now, well, yeah, you saw a big part of that. A big part of March happened on Friday. Look at that. It wasn't as big in the NASDAQ as it is here. So a lot got rolled out already. And so if we come in and we could be trading here, because this is the new premium. So what I'm presenting in the SPX is the follow through of what I think is already in progress, but our numbers in the futures market are going to switch by about $70. So we're going to be sitting up here immediately. So again, these also, once it flips to that other contract, all this will be redone. So I'm right now, this is for Monday under the current December contract. Once that roll is complete I would switch out to that March contract once the volume in March overtakes December. From the way they left it on Friday, it looks pretty clear that it's going to happen maybe on Monday or Tuesday. All right, with that in mind, understand that these higher levels are going to be coming very immediately into focus. So I'm going to have to be adding and redoing them. So make sure that you understand that and don't come in on Monday. And if we've already flipped over to the March contract, don't forget, you're going to have to shift your fibs so that you get March and not December. And so either that, or here's the other thing, either that or you continue to use the XPX, but the cash is the cash. It always will be, and nothing changes. So the cash may come down to here, but if I'm looking at it on the March basis, it's going to be 61.83, or actually 6,083. But if I have to add $70 to this, 6,075-ish. So the whole thing shifts up that much, not in the cash. The cash continues to be the cash, so we can continue to use these levels and these levels. Okay? So, but understand they may come in via the future. We might get there a lot sooner. So, on this basis, this level, which I think is still a very likely place where we might end up, here we have the 4 at 61.91. Well, if I'm coming up here and I got to add 70 to this, that's 62.05. 70 to this is 62.60. So we're up into here. So again, a lot of things could suddenly become very apparent when we're talking these higher levels, and they will become associated with the March contract versus the December contract. So we'll still be looking at the cash to really to just fixate on what level all of this finishes at. So I apologize for that confusion, but it happens every time we are in a roll. And this one is even more important because it's year end. So I'm going to leave this kind of as it is. That's how I have to do it right now because don't have that certainty. But once I get the roll, and then everything rolls out with it, and then I make my adjustments on where all my fibs are. But right now, I'm looking for this 4 to come down, put in a low. Could go as low as 6,009, basis this future, 6,006, basis the cash. And if I had to add 70 to that, approximately $70, then we're looking at 6,076, basis the future once we roll. So we get that low in, and I think we have a steady and a decent rally coming back up. And so then we'll make our adjustments on all these numbers, but these are the levels that we're looking at. And these will shift as well accordingly. But this one, I think, shifts up into this area, which has been long-standing, but still, because of the future shift, we'll be shifting those as well. So instead of 62, we might be looking at the higher end. 62 to 63, basis the futures. So I'm going to kind of leave this open for Monday, other than I'm going to leave it like here. If I come in on Monday morning and we have rolled, I'll make some quick adjustments, and then we'll be talking about that on Monday. But for right now, I'm going to really go back to that cash because that's what I got to work with. Oops. So I am looking again for minuet way 4 to come down, finish up. That needs to just get below 6,029.89 or 29.30. Get below that level, and then find its support, which should be pretty strong right here at the Fibonacci 382 plus the hourly 200. Now I'm going to go back out to the daily and just look at our moving averages on the SPX. They're all still pretty good. We got the 20, which might be tested, but I'm saying it should hold. The daily 20 sits at 6,015 right now. We have that support at 6,006. So again, if we might come in above it, we might come in just below it, depending on which time frame we're using. But the daily 20 might come into play on Monday. And it could finish minuet way 4, and then we start our rally. Everything else really is in good shape. The market ended up closing just above the 8, which is sitting just below the 8. The 8's at 6,053. The market closed at 6,051. So that's going to be it for the S&P 500. And the next daily update is going to be on Monday, December the 16th.